Hello friends, once again a warm welcome to the world of accounting, and our today's topic is final accounts for FYGC, but other students or viewers can refer it for basic understanding. Now friends, what is final account? Final accounts refers to balancing the ledgers and forecasting or presenting in such a form that makes a user easily understand the financial performance of that accounting year in which it relates. Now, my friends, final accounts includes two accounts and one statement. That is trading account, profit and loss account, and the balance sheet. Here the statement is the balance sheet, and other two accounts are trading account and profit and loss account. Now friends, let us see the specimen of trading account. Here it is compulsory to write in the books of Messrs, so that we should know in whose books we are writing. Okay my friends, now then we have to write trading account, and as per the year ended, it's compulsory as per the year ended. It will be 31st March, 31st December, and any accounting year which the business follows. And here there are two columns. One column known as debit record, and a second column known as credit record. In debit record there are again two columns, particulars and amount. Same in the credit record, particulars and amount. Now friends, here in debit record we will record all the expenses and goods purchased which are coming into the organization, whereas in the credit side we will write the goods sold or the goods which are going from the organization. Now let us see what comes in debit side. Okay, now firstly we have to write the opening stock, to purchases less return outward, which is purchases return, and to direct expenses, which are all expenses relating to factory which come under the trading account, will come under the trading account. Then my friends, at credit side we have to write by sales less sales inward, which is sales return. Then by good loss by fire, by goods sent for sample, goods sent for advertisement, and by closing stock. Here the goods lost by fire, goods sent for sample, goods sent for advertisement are those goods which are going out from the organization. In sales also the goods are going out of the organization, and credit what goes out says here the real accounts rule. Hence we will follow this rule and credit what goes out. The goods are going out, so we have to credit in the trading account. Now here at last we have to balance both the side, and the balancing figure will tell us there is gross profit or gross loss. But friends, the gross profit or gross loss will be the balancing figure, and they will never ever coexist together. Now my friends, let us see profit and loss account. Here the profit and loss account is same as trading account, only here we used to write trading account, and here we are used to write profit and loss account. In debit record there we used to write all the direct expenses, whereas in profit and loss account we will write all the indirect expenses, whereas in credit side we were writing direct incomes in trading account, whereas in profit and loss we will write indirect incomes. Now let's see what we have to write. If we have got gross loss, then it should be written at debit side to gross loss brought down, or we have got the gross profit, then we will write by gross profit brought down in credit record. Okay my friends, now then in debit record we will write two indirect expenses. What are indirect expenses? All expenses which is not related to factory and which is related to office. Now my friends, after that we will write to interest on loan, to loss on sale of furniture, machinery, etc., to loss on sale of furniture, machinery, etc., to depreciation. My friends, you have rule of nominal account, that debit all losses and expenses. Here all losses and expenses are debited. Okay my friends, it means profit and loss account is a nominal account, whereas in credit side all indirect incomes or profit are credited. Credit all incomes and gains. Profit is a gain. Profit on sale of machinery, furniture, etc. Profit is profit. You are gaining something, so you should credit it. Now friends, at last we will get net profit or net loss, which we should transfer to the capital fund. Now friends, let us see the specimen of balance sheet. Here the balance sheet is same as profit and loss account and trading account. No, it's not same. Here we have to write in books of Messrs, which will tell us in which books of accounts we are writing, but after writing balance sheet we have to write as that, because it is a statement which shows the current position, of the business. Then here we also make two columns. One is liability, the other one is asset. Here we don't have debit record or credit record, but here all assets are having debit balance, where all liabilities are having credit balance. Nothing else, guys. Now let us see what we should write in liability side. Capital fund, that is capital introduced by the owner of the business, which also includes net profit or net loss. Here net profit is added, and if you are incurring net loss, then it should be credited, my friends. Okay, my friends. Now bank loan. Bank loan should be your liability because it is payable. Bills payable, creditors, outstanding expenses, all those things which you have responsibility to pay back, so it will come under liability. But whereas in assets, all those things in which you have ownership, you have title, are your assets. You can use it as you want. That are your assets. For example, furniture, plant and machinery, stock are your assets. Okay, guys. Intangible assets like goodwill, which shows your reputation of your business, trademark. And my friends, non-current investment, that is long-term investment, are also your asset because you have paid now, but you have gaining interest on it. You are gaining something. Your right is on your investment. Okay, my friends. Now, current assets. What current assets include? Closing stock, debtors, short-term investment, cash and bank. Okay, my friends. This was a short structure of final accounts. Now, my friends, let us see what are direct expenses. The expenses which are incurred before the production of finished goods and which is related to factory expenses are known as direct expense. For example, workers at factory directly engage in production of finished goods are direct wages, carriage inward, freight, fuel and power, custom duty, octroi. Now, what are indirect expenses? The expenses which are incurred after the production of finished goods till the point of sale. In some cases, after sale services also include the business expenses which are not directly related to business, but still they play a major role in running the business. For example, office and administration expense, selling and distribution expense, depreciation, which is a non-cash expense, interest on bank loan, discount given. Okay, my friends. Now, what are indirect incomes? Those income which are earned on activities other than normal business activities. For example, commission received on your other activity business, interest received on investment, bad debts received, interest on drawings, and discount received. Okay, my friends. Now, friends, this is basic of the final accounts. My next video for the topic of final account will be on its adjustment, and I wish you guys to let me know your problems relating to those adjustments which you feel difficult. With your support and my videos will make our accounting concept very much clear. Friends, please subscribe this channel if you like this video and share it, and please let me know your doubts on comment box so that we both can resolve it. If you want to contact me, then can mail me at akasgupta98@gmail.com, and also you can post on my Facebook group Ask Accounts Doubts of CACPT, CS Foundation and FYJC to TYBCom. Okay, my friends. Bye, my friends. We will see and meet you next time, next video.